if I can lower your risk and I can give you a higher probability of a higher return, that is the definition of finding alpha in the investment.
Mm. Welcome back to Super Entrepreneurs Podcast. I'm your host, Shahid Durrani. Today we have with us Ivan Barratt. Ivan is the founder and CEO of the BAM companies, BAM. Ivan's journey from mowing lawns for his father's rental properties to managing over 1.73 billion in transactions is quite inspiring. Welcome to our show, Ivan.
Thanks, Shahid. It's good to be here, man. I've been looking forward to this one.
Oh, awesome, man. I was too. I know we talked about Neil Bawa a little bit. He was on the show. You guys are friends, and that's great to know because you guys are doing some amazing things in this field, impressive stuff.
Oh, thank you. Thank you. Yeah, he's a great guy and always full of new information and ideas. I like when we get the chance to play off each other when we get to speak.
Yeah, no, definitely. So the BAM companies, you basically launched and scaled that on your own in the beginning, obviously, and you apparently started it with your spare bedroom. When you first started getting the business going, was there any kind of moment that you felt any kind of resistance, internal resistance, or if you were feeling really enthusiastic about that venture and you were just go, go, go? Could you share anything from that time when you were launching this business?
Yeah, I was thinking about that this morning, Shahid, because I had a feeling you'd go there.
Yeah.
And yeah, so it's 2010. We are still in the great financial crisis, right? The GFC.
Yeah.
And I'd been in real estate for a little over 10 years. And I'd always wanted to start my own thing. And I figured, it's now or never. I've got to figure this out. And there was a lot of consternation and stress about that. I wanted a big company. I wanted to do big things. But I finally came to the conclusion that I needed to sort of check my ego at the door and really just focus on putting one foot in front of the other. And I came to this realization that it was going to be painful and there was going to be some suffering early on. And really because before we got to be a, world-class investment manager, $1.7 billion in transactions, I first had to figure out just how to manage property for other people and serve those investors in their assets. And I knew that was going to be really difficult dealing with the proverbial tenants and toilets and also growing a team. If I want a big business, I've got to learn the people game. And I knew that was going to be harder in many ways than the real estate side of the business. And I just made this decision that no matter how hard it was or how much I suffered, I was just going to keep getting the mat every time I got knocked down and refused to quit. And I started, really early learning every little part of the business, basically one-man band. And then from there started figuring out how to build a team and how to grow it. And that foundation and management allowed us to start doing our own bigger apartment deals. And then we moved into the fund management game and started doing our own funds. So instead of buying one deal at a time, we'd buy several portfolios or several assets inside a portfolio. And then got big enough to where we were only managing our own projects where we had a vested interest in the upside on behalf of ourselves and our investors. So yeah, there was some excitement there, but I was just listening to like a Joe Rogan reel just the other day that I like to listen to when I'm lifting weights. And it's Joe Rogan talking about, most days I get up, I'm not motivated, right? But I've got to do these things anyway. I've got to suck it up and do what needs to be done, whether I feel like it or not.
Yeah, you just got to get it done. But if you have the feeling with it, that just makes it easier. And you just, it's just a different type of jazz in your step. But definitely, if you're trying to grow a business, you can't let anything stop you. And that resilience is paying off right now. So that's great. Congratulations on that. So also, you mentioned company culture, the importance of having culture and driving success.
Yeah.
Can you share how you cultivate culture in your company and how do you get everyone to buy into it?
Yeah, very proud of the culture we've built here. That really started in 2015. I'd been in this for a few years and banging my head against the wall. Employment, especially on the maintenance side, was a continual just turnstile of people coming into the business, coming out, hiring, firing, hiring, firing. Very difficult. And around that time, I found a great business partner who was a much better operator still today, my partner in this whole thing, as we say, keeping the trains running on time. And a few early key hires that I basically posed this question: what if we had a management company where people liked their job? What if we could figure
Hmm.
out a way where property management, as hard as it is, was somehow fun, and we were able to attract people banging on our door to work here at BAM? And a lot of the credit for that goes to some of my leadership team who have helped carry that proverbial baton with us. Because at the end of the day, it is a people game. Some of the details there really shape around our core values, and that's not aspirational. It's who we are, Shahid. We're kind of fun,
Hmm.
spirit. If you're too tight laced, you're not really going to work out here at BAM. We can't take ourselves too
Good.
seriously. We work
Nice.
hard, we play hard, we win. We're a loyal, loving family. We still do have family in our core value. We try to, as much as we can, treat people like family, and we're loyal to them.
Mhm.
My favorite story there is a maintenance guy that had been working with us for only a few months, maybe 6 months tops, gets in a motorcycle accident, and, he had not checked the disability box on his benefits. Now, at the time, he was kicking butt for us and doing an amazing job. So, regardless of the fact that he didn't check that on his benefits, we said, "Hey, man, we're gonna take care of you. We're gonna find a way to keep you paid while you recover, and your job's still here when you get better." And the favorite part about that job for me is that my team made that decision without asking me, because all they had to do was look at our core values and know from our loyalty position
Mhm.
that what we're gonna
Yes.
do for this guy. And so any chance we
Mhm.
can to be loyal to our BAM fam,
Good.
uh, we're gonna do it, right? And then my
Yeah.
favorite core value: when people grow, BAM grows. And so wherever we
Yeah.
can, we're focused on career growth for our people before hiring somebody from the outside, to take that position. And then we do a lot of
Yeah.
things to bring people together, quarterly events. Next, Saturday, we do an old school style corporate family cookout. We bring everybody in from 7 states, their family, their children, if they wanna bring them.
So I'm coming too, I guess.
What's
Sorry.
that? Yeah. Coming to Indy, doing an old school style,
I'll do
corporate
an
family
interview.
cookout.
Yeah.
What's that?
I'll come out and do an interview.
Yeah, you could definitely come too, man. Come, we'll be playing games and cornhole and dunk the CEO and all
Nice.
all kinds of fun
That's
stuff
awesome.
we've done there. We do a big blowout
Yeah.
Christmas party at the end of the year. It's like a wedding. Everybody's dressed to the nines, plated dinner, after
Nice.
party, big award ceremony to
Beautiful.
the accolades of the people that have really outshined over the past year. And just all these little things and these big things that add up to culture, and it shows
Yeah.
up in employee surveys and the culture scores we get internally. And so many things sort of smooth out, so many rough edges, bumps in the road are smoothed out when you can achieve great culture inside the organization.
Mhm. And you do have that natural energy about you as well, from what I'm sensing, is that people gravitate to you, right? And you have the ability to create that family-oriented environment because of that energy, I feel.
Oh, tell me more. No.
Yeah. But is that
No,
something you
I
always had? Like, were you throughout your life? Did you have that ability with people?
Well, I figured out early on that my best skill is sales and influencing others. And
Okay.
so as I've grown the business, I've used that ability to sell to help us raise capital for our investments,
Yeah.
and that ability to influence others to get buy-in from the team on the vision I have for where we wanna take the company as a whole. And then what I
Uh,
have to do as a leader is once I've got that person bought in to that vision is I get out of their way even when they screw up.
mm.
I have to let some little bad things
Empower
happen.
them. Mhm.
Otherwise, I can't
No,
scale,
that's
right? I passed my ability to
no,
work harder years ago, and
no.
now I've got three little kids and a marriage to protect and try to stay fit, so a lot going on.
Yeah.
Can't scale
Yeah,
without great
yeah.
people.
No, you can't do it alone, and you gotta do it with the right people and the right attitude, and definitely you must have that in your environment to be able to scale this big because it's for me, the what you how you vibe is everything, is more than what you say to me or what people say, is what I sense is what means a lot, and that's why I'm grateful for this show, right? I get to have that ability to be able to be in that environment to kind of see, you know, who who to do business with, who can I, grow with. Because if you're not aligned energetically, it's very hard to even start with a relationship.
For sure, for sure.
Yeah. So how do you get your deals, brother?
Yeah, so at our level now, a typical deal is gonna
Yeah.
be anywhere from 40 to 80 million.
Yeah.
And so, like a rental property or an $80 million deal, a lot of it runs through brokers.
Brokers.
And so at this level, we've got great brokers across the country that bring us deal flow. Some of that off market, some of that not. But they're the ones that are out there chasing the owners, looking for assets that may be coming
Yeah.
up for s and bringing us a big pipeline of deals to potentially look at, and typically, we're looking at 80 to 100 of them to find one that has
Oh,
all the aspects we need to make sure that we can hit the returns that our investors expect to continue to invest with us.
mhm. Okay. And for
Yeah.
to invest with you guys, is it accredited only, right?
Correct. So because we solicit
Mhm.
online, we're on YouTube, Google search, all kinds of different advertising
It
platforms,
needs to be.
those
Mhm.
investors have to be accredited to come on board. Yep.
Okay. So when it comes to multifamily investing, is there anything they can share with the audience that they should be aware of in today's market?
Yeah, it's been a great market to buy, and I think there's a lot of successful people out there that wanna have real estate in their portfolio. They just naturally know that having some real estate in the portfolio is a good idea. Stocks and bonds, I'm not
Mhm.
one of these crazy guys that says, "Hey, all you should buy is real estate." You want a diversified portfolio as an investor. What
Mhm.
most people need to decide is where they're going on this fork in the road. Is it left or right? Left is being me, being a full-time owner, operator, manager of assets, which is a heavy lift. And then the other direction is why I exist. It's for the successful investors out there. They've already got a career or a business. They've got families, they've got hobbies, they've got all these things in their pie chart of life. And if they would stop and get educated first and understand what it takes to be successful in real estate, they'll come to the conclusion that they should be a passive investor in this asset class and partner with operators like me or Neil or dozens of others out there who are doing it full time, who offer great returns without the time commitment that real estate takes. It is a very management intensive
Mhm.
investment.
Yeah. But why do people try to go and, find their own deals and do their own deals when there's companies like yourself that simplify everything? There's some obvious reasons, but are there any other pointers that you could share why people lean more towards trying to find their own assets?
Yeah, I mean, I think part of it is it's ego, part of it is control. When you partner
Yeah.
with me, you're not in control anymore. You're giving over the
Yeah.
management reins to me. You may own
Mhm.
the restaurant, but I'm chef in the kitchen. And I think a lot of people wanna control it. I think there's some miseducation out there that you can make a bigger
Mhm.
return on your own. And while you
Yeah.
may be able to do that once or twice, consistently over the long haul, I'm gonna outperform you. So we get a lot of investors that have 2 rental properties, 12 rental properties, commercial properties, and so they've been investing, and they are sick and tired of dealing with the tenants and the maintenance
Mhm.
and the upkeep and basically the second job that they have managing their own portfolio. So they're looking to transition out of that. Now, let's go back to that accredited investor point you made earlier, Shahid. If you're not an accredited investor yet, and you're young, and you've got more time on your hands, and maybe you don't have kids yet or a job that takes up a ton of time, owning a rental property or house hacking a 2-unit or a 4-unit is probably a great idea and a good way to start building some wealth in your portfolio with your own 2 hands.
Mhm. Yeah, just to get the ball rolling.
Yeah, the other fun story, if I could go on for
Yeah,
a minute here,
please.
I'll give you one anecdote. Give you one anecdote. A guy calls me, he's, "Hey, man, I sold my software business. I've got, 40 million in the bank, and my next adventure is real estate." And he's kinda got this attitude, "How hard could it be? I bought a house or I bought a rental property. I'm gonna go full-time real
Mm.
estate." And so my response to that guy was, "Hey, that's so funny you called. I'm thinking of selling my real estate business and starting a software company. How hard could it be?" That usually
You
gets
threw
la
it back. Yeah. What was his
the gr
response?
Oh, he laughed. He's become an
Yeah.
investor of mine, and he's doing a little bit on his
Okay,
own because
good.
he's got that are trying to learn the game. But it reminds me of another saying I heard recently that's a new favorite of mine, which is the grass may be greener on the other side, but the water bill is probably higher.
Ah, that's a good one. It's different than
Yeah,
the
right?
typical. Yeah, I like that.
Yeah.
So, do you have the rights? Are you gonna use that more often, or is it the first time you used it on the show?
Oh, it's all open source, free for the taking.
So if you ever hear me on the show say it again, then you know where I got it from. Trying
My
to
heart
remember
will
the
co
name
my
because
heart will go out of my shirt if I hear you say it on another episode.
well, I'm not gonna do that to you, Ivan. So, but it might happen. So I'm just putting it out there. But that is incredible. What you're doing for other people and investors. Can you share why you were in the single asset, dealing with the single asset deals and managing it in the beginning, and you moved into the fund model? Can you share any you know advantages or issues with going and creating a fund
Oh,
instead?
absolutely. It's
Mhm.
incredibly difficult. I had to do, I think, a little over a dozen single deals and return capital to investors, selling some of those assets and going what we call full cycle, where they see the proof in the pudding. Going to a fund was markedly harder, but the advantages to me, Shahid, are that I don't have to drop everything I'm doing, cancel a vacation with the family when a deal falls in my lap. With a fund, I can increase my capital raise runway, and I can build up dry powder. 2 deals land in my lap at the same time, I've got more dry powder to pounce on those deals. And then for the investor, it adds more diversification. So instead of you and me going out and buying a 250 unit deal together, and maybe you put in 100 grand or $1 million, instead of me spreading your million across 250 apartments in one location, I'm spreading it across 2,000
Mhm.
apartments across several markets. And so you've got to let
Mhm.
less downside there. And then you as the
Mhm.
individual investor
Good point.
also no longer have to determine if, like, this is Ivan's home run, or is my next deal gonna be my home run, or maybe the deal after that. We're gonna participate in all the acquisitions in that investment period, which we're usually doing a fund every 2 years. And so you're going to participate in the ones that do okay and the ones that hit it out of the park. And that does maybe reduce the overall return of the fund a little bit, but you didn't accidentally just invest in my normal average return, which is still great, and you didn't miss out on the home run. So your odds of a higher overall return are higher.
So they end up being higher.
The odds are, right? I can't guarantee it.
Mm,
We're still in the investment game, so there are no guarantees, but if I can lower your risk and I can give you a higher probability of a higher return, that is the definition of finding alpha in the investment.
mm. So do you have fund of funds as well?
All the deals we do, we are either the only general partner, meaning the fund is investing directly into a deal, or in some cases we're co-general partners
Got
with
it.
another
Okay.
operator or developer, but we're not what you would call a fund of funds. We have funds of funds that invest into our fund.
That's what
And
I
then
meant, actually. Like, do you
yeah,
have
so
fund of
we have
funds? Okay.
what we might call a feeder fund or another fund
Yeah.
that invests into our fund, and then our fund specifically is mandated to invest directly into real estate assets, specifically what we call investment grade or institutional multifamily. So you're not buying a little rental property or some
Mhm.
old ass apartments. You're buying, infinity pool, clubhouse, yoga
Yeah.
studio, pickleball,
Yeah.
nice units, right in a great school district with lots of different kinds of jobs within commute times.
Mm. So what are your thoughts on creative financing
I
when
love
doing
it, man. I started
deals?
my career in creative financing. Yeah, my second and third
Mm.
deal were owner financed, and when I was still cutting my teeth doing little deals, I was
Yeah.
buying small distressed multifamily. I found the worst deal in the best neighborhood I could find, distressed properties with distressed sellers that just wanted to get out. And I used what was called back then hard money or private money to,
Mm.
buy the deal, renovate the deal, rent it, refinance, and repeat. And so
Awesome.
creative financing, if you wanna be a real estate operator, it's very important to get educated in creative finance. And some of those early ideas we're still using today. We raise what's called common equity. We raise our own
Mm.
preferred equity, and we're also giving our investors access to debt products so that that accredited investor who's maybe retired now or they sold their business and they've generated the wealth and now they just want to get good income off that wealth instead of risking it further. They maybe want to live off that income distribution. They can now come along, invest with me, and be the bank on investment grade
Mhm.
institutional real estate. For that deal, 5,000,000 net worth is the minimum that qualification to invest in that strategy.
Mm. So being in this position with the show and meeting wonderful people like yourself, I and the audience, obviously, I do get a flow of deals from brokers and other sources that come my way. You obviously wouldn't look at anything like that because your minimum is a specific criteria because it's a fund, correct? If I shared some deals with you, I meant.
Oh gosh. I mean, we get deals from all kinds of sources. If it's a deal, we're pretty tight with what we call our buy box. So we're
Mhm.
looking in Midwest because of the steady nature of that market versus some of the boom bust markets around the country. So we're Pittsburgh to Kansas City, Indianapolis, Michigan, south to Rogers, Arkansas, the fastest growing small city in
Mhm.
the country right now. And so we're looking in
Mhm.
those middle landlord friendly or what we call the red states. And
Yeah,
a
red
typical
states.
deal for us needs to be at least 30,000,000, but preferably it's 40, 50, 60,000,000. So if you're in the buy box, man, let us know. Or if
Okay.
you got something
Yeah.
in the buy box, for sure.
Yeah, my criteria usually that I put out there is off market, open to creative financing, good NOI, minimum, I would say 50 doors. I have different buy boxes that I can funnel it through, but I just wanted to ask you as well.
Yeah. Sounds like you know the game a little bit.
Yeah. I'm meeting different opportunities or sources of income, if you may say, and learning from you guys, that you put so much energy and effort and passion into what you do. It and not just real estate and different products and services that, I get enthusiastic about it. I want to learn. I want to see how I can help. And because of the exposure, I'm able to put anything under this umbrella as long as it's helping others, if that makes sense.
No, I love it. I love the approach. I love the approach. Yeah,
Yeah.
our minimum door count is typically gonna be 250 if we're not in the market already, because we manage everything. So I've gotta get a big beachhead to enter a new
Understood.
market. And if it's a market we're already in, we may look at 130, 140, 150 units that's a straight down the fairway add-on if we're in that market already. And then
Mm,
from a vintage standpoint, we buy Class A, newer than 2015 apartments, and our basic strategy is we look for mismanaged or undermanaged
mhm.
assets. Out-of-state fund owns it, private equity group owns it, they're out of state, and we target mediocre third-party managers that aren't necessarily doing a terrible job, but they're not optimizing it
Mm.
like owner would.
Yeah, definitely. Well, thank you for sharing that. It's really important for me to know when something clicks, I know where to go. So this is great. Thank you so much for sharing. And you also mentioned, and I love this, it's so important, but you mentioned the importance of mentorship. Can you share how your experience with having a mentor had a really huge impact on your career?
Absolutely.
Mm.
Gosh, we could do a whole 2-hour podcast on mentorship, peer
Really?
groups, and
Mhm.
coaching. I would say
Mhm.
those have been 3 of my greatest sources of personal growth. Very lucky or fortunate early on to have a great real estate mentor, still take him out to lunch or get him on the phone, any chance I get, and that drives me to pay it forward when young up and comers reach out to me. And then I think even more so than that from sort of a day-to-day or normal routine cadence would be being in peer groups, trying to find ones that have some like-minded people, but also some folks that are a little higher up the mountain. And also typically those networks like I'm in YPO and Tiger 21 give me amazing access to wisdom via other CEOs that I can now get on the phone that are way up that mountaintop that are willing to talk to me because of where I'm at and the networks I'm in. And then, of course, the final icing on the cake would be in any area of my life where I want improvement, I've got a coach. So, got a trainer that comes to the
Mm.
house, kicks my butt 5 days a week.
Awesome.
My wife and I are, proud to say we get a third party in the room anytime we're a little off the rails, because it's a big, busy life we lead. So having some marriage coaching. We've got a parent a
Nice.
parent
Very
helps
good.
come alongside us because we got 3 world-changing,
Wonderful.
crazy kids that are, gonna be great humans one day, but can be tough to raise. And, personal coaching as well in business and all those other categories of spirit and faith and fun
Oh,
and,
beautiful.
of course, making money. But I find if all these other things on my report card in business and in life are getting good grades, the money's just the byproduct rather than the focus.
Mhm. Mhm. That's great because the level of importance where you wanna get somewhere, you know what you need to do to get there is very the way you're speaking about it is simplifying it for everybody because any area you want to improve, you get someone that has already been there and ask for their help. And you're doing that in
Absolutely.
various areas of your personal and professional life, which is great.
Yeah, it's not rocket science, is it, Shahid? It's maybe
No,
not
no.
maybe not easy, and sometimes people
Mm,
get hung up or find it difficult. It's pretty simple at its core, it's just not always easy
mm,
to execute.
mm.
But if you can
Yeah.
just move these little steps, one foot in front of the other, one
Yeah.
day at a time, they'll start
Yeah.
compound.
Yeah. No, wonderful. So, for our people in the audience, if you're on the audio or if you're on video or if you're audio, just hop over to video and leave us a comment, and share with us if a mentor has impacted your life in any way and what lessons you learned from it. We would love to hear from you. Been such a wonderful conversation, and especially grateful for the opportunity to be in your presence, to read that energy and what you're doing with your life and others, because you're creating a platform that can impact people that are out there looking for this kind of help, because it's really, really noisy. There's a lot of opportunities, especially with AI. Everybody is on that race trying to find out what's that product that we can launch in AI. And real estate is such a thing that it doesn't matter what phase the world goes through, you can always come back to real estate because it's part of the earth.
Yeah.
You're doing business on something that's on the earth. That's so special.
Well, I like rooftops. No matter what happens, people need a place to
Yeah.
live.
Yeah. No, that's great. Ivan, appreciate your time. Thank you so much. And audience, thank you for joining us today.
Honored to be here.